we have a bunch of topics to discuss, including US dollar, New Zealand dollar, last week's earnings, including NVDA, and the market volatility that we saw, plus a few other topics. So let's get straight into it. I'm going to just share my screen. Starting off with the US dollar, New Zealand dollar relationship. We still have a very strong US dollar at the top of this kind of long-term range that we've seen in the currency pair for a while, but getting to the top end of that range, kind of moving into I guess, overreaction that happened once before, and that was in about 2008, 2009, where at one point there was 2 New Zealand dollars for every US dollar. And if you were to look at NVIDIA's chart, it just looks really unhealthy. So this big price move here was essentially the post earnings day or session, and it's pretty concerning. So what we observed from some options flows was that there were a lot of short-term options out in the market. So after that price move and their 62% beat on revenue, the stock went nuts, had a big gap up. But people are going to be unloading those options at open, and I think that may have contributed to essentially the subsequent sell-off. So you had a lot of people with short-term options, and perhaps that was a bit of a headwind after the price action had happened. If we go and look at Bitcoin, it looks absolutely disgusting. There's been a kind of August to the current kind of time frame gap down of over 35%. Very volatile, right? So we'll see. We've seen it kind of move. If you zoom in here, we have seen a kind of floor found and some positive price action over the last day, but low volume over the weekend. We need to see how next week pans out. If we take a look at gold, gold has now been in a range after it did have a bit of a drawdown from the high, and it's not acting nearly as weak as equities or Bitcoin. And then lastly, we've got the futures. This is the S&P 500. Again, relatively choppy price action, quite volatile, which reconciles with a VIX that I think topped out at about 26 or 28. So important to note. Okay, so if we took kind of a bit of a macro comparison view there, and we looked over the last month, you would observe that ARK and Bitcoin are heavily correlated. ARK is predominantly relatively low quality companies, plus some high-flying names like Palantir and Tesla. When you looked in the holdings of ARK, you saw a lot of exposure to crypto and Bitcoin, which does explain the correlation between Bitcoin and ARK. Basically, massive underperformance. You've got slight outperformance from the TLT, which is the long-term treasury ETF, against the S&P 500. That's down 3.84% over the last month. And an interesting point of note would be the XLE, which is the energy ETF, which has been quite a lot more, strong than this kind of risk-on trade, which has been, AI and quite speculative, unprofitable companies, technology, and Bitcoin and crypto. So that's been the high risk, high beta trade that has recently underperformed, and XLE energy is up over the last month. So quite an interesting observation. So over the next week, we have a couple of earnings that we're looking at just on out of interest. There's a bunch. Obviously, we're deep into earnings season now. We've got another couple of weeks. But obviously the big names have already reported, like NVIDIA, the banks, the Mag 7, etc. But we do have Broadcom next week, which is quite a big one. But this week we got Zoom, Dell, Workday, Abercrombie, Autodesk, and Neo as some just on the schedule kind of I found quite interesting. They're all pretty beaten up over the last month, with Dell getting the worst of it, down over 24%. If I was to take a quick look at some of the price targets and fundamentals, uh, let's see who's got the best revenue growth. That's earnings growth? So Workday and Zoom with the strongest earnings growth year over year, and then Abercrombie and Finch has 21% of the float short, so it's a highly shorted name. Kind of a very interesting one. Taking a quick look at some of the price to earnings ratios, Workday has always traded at quite a high multiple at 100 right now, and we got Dell sitting at 17. It's had a big drawdown. That's quite an interesting piece. And then you've got like something like a Deere, right, which is a Dow Jones special trading at 24 price to earnings. So this is what's on this week. We'll be tracking along. And then last week, what we did is we just out of interest put a NVDA short ETF and Palantir short ETF into a strategy, and we're just going to basically try and replicate how burry short would kind of pan out using inverse ETFs. 80% Palantir, 20% NVIDIA, which was quite similar to his 13F filing. So far up, but yeah, I mean this trade has a lot of risk to it. So we might see that this gets completely blown out of the water, especially as we come into the end of the year. Seasonally, it's quite unlikely that markets would have a large correction beyond where we've already had, just from a statistical perspective and seasonal perspective. But there's a lot of headwinds connected to multiples and how the AI trade may have a lot of volatility in how the market wants to price those companies. So that's a real problem for the market. And then there are some kind of geopolitical and macro dynamics with the yen carry trade and so forth that are kind of creating liquidity constraints in the market, which would be consistent with large price moves in companies like assets like Bitcoin and gold. So that's all we have for this week. We hope you have a good one, and we'll be tuning in next week to talk about all things macro markets and how that relates to New Zealand market participants.